Good evening and a warm welcome to you and your money. I'm Bryan, and in this installment we're going to focus on the short-term insurance industry. Over the last few months there's been an enormous amount of downgrading with individuals' medical aid from comprehensive to hospital plans. I have no doubt that many would feel this to save money, they would like to downgrade their domestic policy. And joining me this evening from the Jurgens Group is Greg Britz, Managing Director, and Shane Pickles, Sales Manager. Shane, Greg, thank you very much for joining me. I started off the program, you may have got a fright thinking guys are going to be questioned on healthcare when I started to talk about downgrading from healthcare. Yeah. But a lot of that's taken place, and a lot of people have moved from comprehensive medical aids, which the costs are just rising 10, 11, 12%, medical aid doubling in the next 5 to 6 years. It's really quite frightening. So short term, I would imagine, and I'm not sure what your experience is in this field, but are clients starting to look and insure sensibly rather let me insure for everything and then have problems and also pay extra premiums?
So we've restructured our products over the years, and I think that has helped curb that because the most expensive part of a short-term insurance policy would be the all-risk section. So specifying your articles, watches, rings, whatever the case may be. And the products have evolved to becoming how much cover do you want out of the home? So that's the most expensive part that people have that they can cut back on in terms of the cover. But so instead of specifying every item, they can select a number now. I only want 50,000 rands cover out the house, and it'll cover any item out the home. In the old days, there was a thing called unspecified all risks that was very limited, but now the products have evolved and actually helped save. But we're not seeing it too much. But again, I think because we've changed the way we're doing insurance.
Shane, from your point of view, in terms of sales, what percentage is domestic insurance and motor insurance? If you've got I know it varies from company to company, but what percentage are one premiums increasing?
Generally between the 5 and 10% is what we're finding in the market. Again, nothing is cast in stone, Bryan. So again, from our side, from an advisory point of view, is having a look at the client's individual portfolio and not painting everyone with the same brush. For instance, you might be, your policy, you've had no claims on your policy within a certain period of time or a year or two. So why should you be painted with the same brush and having a 7 or 10% increase when it should be lower? Again, I think from an advisory point is to make sure you're looking after each individual client and giving them the best that you possibly can.
Although the corollary to that is that with values increasing, sure, with inflations and sum assured, yes, that alone is creating some increase in premium, and then you've got insurance companies' premiums increasing irrespective. Because I mentioned healthcare, and I mention it again, even though this is not our healthcare segment. If medical aids are increasing 11, 12% a year, in 5 to 6 years' time, your medical aid premium will double. And in another 6 to 7 years, it'll double again. Yeah. So if someone's 50 and they're going to retire at 65, they're going to be paying 4 times for medical aid cover when they probably have more need for it than at a younger age. Yeah. And I would imagine, we talk about electricity, we talk about rates and taxes, we talk about all those things completely out of our control. So people need to understand you need to take control of healthcare, and you need to take control of your short-term insurance. Yes. And Greg, if you don't do that, you're going to run into real problems. And are you finding your older people, your older clients who've been with you years, are they amending their policies?
Correct. They're cutting back on the wider cover that they need. So they're not as wanting as much cover as they needed before when they were working. Because I think their whole portfolio has changed because they're more at home. They're more staying at home, so they don't have the larger numbers of the goods that are taken out of the home.
So let's just talk about catastrophe cover. If you're putting a policy together, middle class individual wants to put a policy together, and what are you advising them when they start telling you about laptops and all the cell phones and all that? Yeah. What are you advising them? Paint a little picture for our viewers of what do you think is adequate, particularly for catastrophe, and where should you be thinking very carefully about whether you need to insure those items?
So I'll give you an example of a deal I did this year with a client. So he gave me his current policy, which is a traditional policy. It had 3 laptops on it. It had some contents, and it had. But I looked at the policy and I could see it was underinsured. So again, if people are cutting back and they've got 300,000 rand contents, which is not a lot of money, most average households are at least at R1 million worth of contents cover. So what we did was we said to him, give us your building policy, and we had a look at the holistic part of it, and we found we could actually get him to pay less for the composite of the product, and then still get the wider cover. And then again, to his all risks, giving him instead of specifying items. That is a big cost of premium, is specifying items. You specify a cell phone traditionally, or you specify a laptop traditionally, those are big numbers, but you've only got one laptop and one cell phone cover. That's why I allude to that. The products have evolved, and we're now saying to clients, go in this direction where you're not specifying anymore, and you're just taking an amount of money that you want covered out of the home, and that has reduced the cost of insurance significantly for clients.
Okay, we're going to come back, Shane, going to come back to underinsurance particularly, and also people not taking control of maintenance of roofs. Yes. But I just want to ask you, we've had a tragic event happening in California, yes, and what impact is that going to have going forward on reinsurers, and then conversely on South African insurers?
Yeah, Bryan, so interesting, the current figure I think is sitting at about $20 billion in losses on what they call structures, which also includes homes. As you've known, some celebs have had their homes burned down as well. Some 5,400 structures in total. So a massive blow for the market and reinsurance market. And definitely I think there's going to be some kickback from the reinsurers overseas, especially with fire cover in California. But again, a catastrophe like that will affect South Africa as time goes on, because these reinsurers will have to look at their fire policies as time moves forward and reevaluate that country by country, especially in high-risk areas where you are prone to fires.
Is it true, and I mean, someone told me this, that the homes that burnt down are not insured for fire?
Bryan, say yes, in certain instances.
Is that true?
California, you can battle to get fire cover. It is known. I actually have a client that actually lives in California and owns a property up here in one of the parks up in South Africa. I can't say who that is. But when she found out that she could get fire cover in South Africa, she was ecstatic and took it immediately. So California, you can battle to get it. Some insurers don't do it, but then some insurers would charge you 5-10 times the price. So there has been instances, yes, where people just choose to self-insure, and of course then this catastrophe goes and happens.
I mean, we had that big thing in Knysna and that
yes.
area 7 years ago.
Yes.
So let's just talk about that. We're seeing a lot of rain and a lot of flood damage. Yes. Is there any way insurers, can you see that they will not provide that cover?
Not in Gauteng and in the Western Cape, seems to be reasonably under control. KZN is definitely on the insurer spotlight. So all those estuaries and all the rest of it, and the streams and all the rest of it, we've definitely seen an excess movement. And the one insurer made the comment that it's getting to a point that if you're living in a channel, so if an insurer cancels you in KZN due to flood, there's a good chance you won't get the cover again in the marketplace. So there's definitely an increase in excess structures as we speak. But so they're on the radar. KZN are definitely on the radar when it comes to flood.
So Greg,
not so much Johannesburg and
so Greg, what happens if you can't get flood cover? You've got a home worth 3 or 4 million, you've got a factory. I mean, and
I think what's going to happen, because I see what's happening in California now, because again, are they going to get covered? Because they were a high-risk area and historically, and then insurers went and dabbled there again, but now they're talking about government intervening. So you're probably going to end up having like a Sasria type cover, that riot cover that the insurers don't want to carry, and then they're going to have to do something at that level and maybe try and do a wide all. But the bigger issue with KZN for us is that the infrastructure is not well kept, and that's what's causing the floods, not so much the fact that we're having bigger rains or whatever the thing is. Because that one flood claim that happened the end of when was it, 2 years ago, it was more to do with infrastructure than it had to do with the fact that there was volumes of rain coming from the sky. So again, I think what needs to happen is probably going to find insurers are going to push harder at government. Like I said, excess of 20% of the loss is being transferred to the client now, so on certain insurers. And I think they will get to a point that clients won't get cover. If we tell an insurer that another insurer is given notice because of flood, the market will reject it. They'll tell us, no, we don't want the risk.
Yeah. Shane, premiums? Do you see premiums increasing this year?
Yes, definitely. I think as they do every year, just a good example, we always get the common one on motor vehicles, for instance. You know, why is my car depreciated,
And the
but my
premium going
premium
up.
has gone up?
Yeah.
I think people need to understand that motor manufacturers are actually the ones driving that. These raw materials become more expensive to manufacture every year. So naturally, the cost will come down. I know you'd love to have your premiums going down, but the cost of repairs, unfortunately, is just skyrocketing. They're just a lot higher, and a lot of the times there's no spare parts available in the country. It's all on sea, and you have to wait for it to arrive. They don't air freight them anymore because that's a higher cost. So definitely, I think you're going to see a small movement. Again, depending, Brian, on the losses that the client has suffered over the last few years. Are they a good client, a moral risk, etc.? We need to look at all those aspects of each individual and not just paint them with the same brush.
Okay, I'm going to try and sneak another question in before we take a break. We may have to carry on afterwards. Let's talk about body corporates.
Yes.
I mean, you know, everyone thinks my body corporate covers us. They've got everything covered. Don't always realize that you are responsible for the contents and what goes on inside.
Yes.
What is happening there? I mean, are there becoming problems there with water damage, geyser bursting, and that?
Yeah. Brian, so body corporates in general, geysers are a big aspect of your claims or loss history, as well as maintenance. We're finding that maintenance are big areas of concern on body corporates. And that stems partly from homeowners not paying their levies. And that might sound like something small, but when you have a number of homeowners that haven't spent or paid their levies for 2 or 3 years, it all escalates. So the body corporate now doesn't have money to actually maintain the premises properly. And that's where that maintenance word comes in, that the insurance companies will not pay a claim if it's not maintained. I know Greg has a few comments on that too.
No, we just had it recently, so we've just seen that the maintenance has become a thing. We do think they're underpriced at the moment, so we do see quite a movement in terms of premiums to that sector. But what's happening is that the roofs and the walls. I mean, I went to Complex the other day where...
Okay, I'm going to come back to that.
Okay.
We're going to take a break. Someone needs to pay for the time. So we're going to take a short break. Stay tuned. We'll be right back.